Hey everyone, it's Trisha with Easy E-mini Trade, and I just want to go over some more divergence type of setups off support and resistance using a larger time frame chart. Seems like a lot of people have a lot of questions, so I'm going to clear it up hopefully, and I'm going to do a workshop, and it's only going to be open to the first 20 people who sign up because I want to make it interactive where you guys can participate and hopefully get a better understanding on how to apply this. And I'm going to do that on Wednesday, July 18th at 1 o'clock. And then immediately following, probably around 2:15, 2:30 after we do the workshop, we'll go into the live market and hopefully do some trades. And I'm also going to allow those 20 people a week in my room so they can see it day after day firsthand how to trade those support resistance areas. Okay, so let's get started, and I'm going to start with the NQ on a 2-minute chart. Now, I don't trade off a 2-minute chart, but I really just want to show you that it really doesn't matter what style or size chart you're trading from. It's going to be relevant for whatever you're looking at, instrument-wise or chart-wise. So on the 2-minute chart here, this is the NQ yesterday morning, Monday the 9th, and you can see right off the open. Here's the open here at 9:30 down. You can see where the volume picks up. So that's the open. And so price is trading along, and then you can see it tries to break through this 81 area and doesn't manage to close above it. If you look at your price bars, you can see we've got a higher high here than here. And looking at my stochastic, and it's not going to matter what indicator you like to use, you're going to find that you're going to be able to spot divergence on anything. MACD, RSI, CCI, stochastic, it does not matter. This is two stochastics that we just always use for filtering out our slinkies. So it's already on my chart, so that's what I'm using. And this is just, I know I'll get a question, this is just an ATR. With the volatility, I've had that on there to make sure I'm using a big enough stop throughout the day. So anyway, higher highs on price. Well, on my stochastic here, I have a lower high here than here. So that's divergence, giving me a heads up that price is likely going to pull back. Now, you could trade off the 2-minute chart if that's what you normally trade off of and get in under this bar right here where we had the divergence, or you can drill down on a smaller chart and see if you can fine-tune your entry. If taking it off this 2-minute chart, what would go through my mind would be the area here to my left where you'd be getting in. I would just be aware that it did get stuck there on these few bars, but it did trade down to 71 1/4. So if I get in under this bar here, I would look to the left at this swing low here and use that as my first possible area where I might have to adjust my stop or get out. As price goes lower, looking to the left, this is pre-market, so not a whole lot of volume pre-market, but you'd have to at least be aware that it did react in that area earlier in the morning. And so when that bar right here forms and it gets through it, then you're just constantly looking down to the next area of support. So you would be trailing this. You can use the super trend stop on a smaller chart if you like. You could trail bar by bar, however you usually manage it. And then down here where it continues lower, gets through this area of support resistance that I've got marked here at 62 1/4, just to come back and basically you can see consolidate in that vicinity there. When this turns into a bottoming tail like that, obviously the buyers were able to push it higher. So this, you might want to just at least be aware that this could retrace bigger or now consolidate before moving down to the next area of support. And then obviously it does move lower. I'm not saying that you could or should have captured this whole entire move. It would really just depend on how you managed it. The thing about divergence trades is that you're just looking down to the next area of support or up to the next area of resistance. Obviously, you're not generally looking for a runner, but sometimes you get lucky. And then as it hits support down here, I don't have divergence, so there's nothing for me to do to buy it. However, I will say, in looking at this, if you were looking at this area here on a smaller chart, I'm just going to circle it. Realistically, you probably could have had a couple divergence type trades off a smaller chart here as it was consolidating, and possibly here as well. The other thing that I want to point out is that if you're expecting a support and resistance area to hold, make sure you're not trading in a volatile market where it's slipping through by quite a bit, or you're expecting support and resistance to hold during a news report coming out. That's just asking for trouble, in my opinion. So the next divergence that we get, you can see price trades back up to resistance here. And I don't have any divergence because if you look at price, I have higher highs, and on my stochastic green line here I have higher highs. So nothing for me to try off this 71.25 area, at least off the 2-minute chart. Now if I was looking at a smaller chart, I may have an entry. So trades back down to support here, and again, no divergence off the 2-minute, but looking at a smaller chart, you probably might have had some divergence to where you could buy that off that 54.75. So price trades back up to resistance here, right there. And looking at my stochastic, obviously we don't know what's coming to the left, so let's just ignore that for now. As you're trading, you only have the current bar, obviously you don't know what's coming up. Wouldn't that be amazing if we did? And then looking at the stochastic, I have a lower high here than here. So we do have divergence here, but by the time this bar closes, it's a huge bar. And if you were going to get in this, you'd be looking under this bar here. So realistically, not a great spot to try to get in because the bar is huge in size, and you basically would be giving back, all of this. So not a great spot because you'd be getting in, under the low here or even under this area of support. But when it pops back up again, so we pass on this, right, because it's just huge, right? The bar is huge. When this pops back up again, tries to break through 71.25, this to me is ideal because you see it trying to break through here on this green bar right here, right? And it fails. It rolls back over. And look, if we adjust our divergence line here, you can see that we still have higher high on price right here compared to here. And on the stochastic, we have a lower high here than here. So we could short that. And this is a much better area to enter because now we have room down to the area of support that had been holding. So you can enter in under this bar or this bar. Either way, it won't matter. And like I said, if you're looking at a smaller chart, you probably had some more opportunities in a couple of these areas. So I'm going to just show you on a 4 range real quick just so you can see the difference. Okay, so here's a 4 range on the NQ for yesterday morning. And 4 range honestly has been too small usually to trade off of. So we've been using a 5, 6, 8 range chart. But this area here, this is this spot right here on that 2-minute chart where we had divergence. And here it is on the 4 range. So we have a higher high here than here, and this high here on the stochastic is lower than this high here. So you want to match the peaks. So you're going to use the peak of this stochastic to go with this peak of the price here. The peak of this stochastic to go to this peak here. These are just kind of in the middle of nowhere here. I generally wouldn't use divergence if price, if the stochastic is hanging in the middle here. As long as one of them is overbought or oversold, that's usually better. But when they're just hanging in the middle here, I wouldn't trust them too much. So anyway, if you wanted to short on this guy, generally you'd wait for that stochastic to roll over below 80 and you'd wind up getting in under this bar here. All right, so now looking at that other area from the 2-minute here. So I said this was consolidating, and realistically we can even look here as well. Okay, so on the 4 range, we're looking at this area right here. Okay, so we don't have anything that we can do off the 2-minute, But again, I just want to point out that if you drill down on a smaller chart, you might have a few more opportunities. So looking at that on a 4-range, you could see this is the area that we're looking at on that 2-minute right here. So coming down to the 50% fib retracement, we do have divergence. Now, again, with news, if there's news at 10, I would pass on this because it's just before 10. But coming down to the 50%, we've got lower low here than here. Looking at the stochastic, higher low here than here. So you could go ahead and buy that. And I generally will wait for the green stochastic here, in this case, to get above 20 and then get in above the bar that gives me that. Because very often you'll find if this is going to break down lower, you'll never get this stochastic line to get back above 20. It'll kind of roll over and then price will start lower. And then, luckily you're not sitting there in a trade. So you could buy that there. Then as it gets up to resistance, which would be up around the 90 and the 200 EMA here, I don't have any divergence because if you look at the stochastics, I have a higher high here than here, same as price, so no divergence there. Here, it's not quite tagging the 50% area down here. So I would be a little leery about trying to buy this because if I buy it, then, using divergence, I may only get like a couple bar bounce before it tries to tag that 50% again. So technically, there is some divergence there. If you look at price here, I've got lower low here than here. And on my green stochastic line, I've got a higher low here than here. And it could even be equal lows. That would still be divergence from what price is doing on the chart. Like I said, I would pass on that one just because to me I'd be looking at the 50 as support now at this stage of the game. Up here tags the resistance area of the moving averages, 5-minute low, whatever you're using for support resistance. Now there's little itty bitty divergence here, but this wouldn't be big enough for me to want to do anything. It's like covering 2 bars. So here you have equal highs. Looking at the stochastic, you have a lower high here than here. But to me, this is, minuscule. So I would pass on it. Now, if this bar here came up and took out these highs and gave me a higher high, and then I had this lower high here, I would be interested in that one. But we don't get that. So again, I would pass on that one for myself personally. So that's this area right here. Now let's move on to the next area where we get this consolidation so you can see what that looks like on the 4-range. Okay, so here is the 4-range back in the area of this consolidation here on the 2-minute chart. So looking at the 4-range, that's right in the area here. So we're looking at what price is going to do as it gets to support. Now remember, if this is the first test of this area for the day, you want to be cautious because we don't know it's going to hold there yet. And I would use, like, if let's say, we open at 9:30 and we tested this area, let's say pre-market in the middle of the night, I would want to make sure that it holds during regular trading hours. So this is the first test of this area, so I would be cautious on taking this time around, but you do have divergence. You can see lower lows on price as it's hitting support. And then looking at the stochastic, the green line, you can see I've got higher lows. So this is giving me a heads up for a bounce. Now at this stage, I don't really know where, it's going to bounce to. Is it going to be like 1 bar, 2 bar? So like I said, this is the first test of this area, so I'm going to just sit on my hands here and see what happens. So it does manage to bounce. Then it attempts to break down, and it can't. It tries to break down, and it pops, and it tries again, and it can't. So that, to me, gives me some confidence that it's going to struggle breaking down here, so I feel a little bit better about trying to buy the bounce here. So I get divergence, lower low here, then here, and then looking at my green stochastic line, I have a higher low here, then here. So I could go ahead and buy it. Realistically, for myself, I would probably wait to get back above this 43 spot in the event that, you know, it holds as resistance now. So I would look to enter in likely above that bar or that area right there. And then I would be looking up to the next area resistance. So I would have to at least be aware of these little swing highs here in the event that price can't get through. But ideally, I would be looking up at that 90 EMA and then back up to, you know, realistically the 200, because we didn't even pause here at this 49.75 on the way down. So I would be looking, you know, back up to that 200 if it does get through the 49.50. So then we managed to trade up to the 200 EMA here. And generally, you know, price will react in those areas. So I'm pretty cautious about doing anything in those vicinities. But for, you know, whatever you guys are able to do based on your rules, you can see this is still that same area on that 2-minute chart. It's still all in the same area here. So I've got higher highs on price. Looking at the stochastic here, I have a lower high. So if I determined that there was enough room to try that, I could give it a shot. Now, when the stochastic gets below 80 here, it would have me getting in realistically under, you know, one of these bars right here. And so that is pretty close to my 90 EMA. So I'm probably going to pass on that. I think, in fact, I did take an entry on that, and it took forever yesterday, but I didn't do a divergence trade. I took a different type trade. But regardless, if you determine there's enough room, you can give it a shot. I'm going to say when price is sandwiched in between the 90 and 200 EMA, it can get stuck there for a bit. You can see it does eventually break down. But remember, on divergence trades, we're just capitalizing on the pullback. We're not sitting there waiting for runners, okay? So I hope that you find that helpful, you guys. If you're interested in the workshop, it's in the email that you're receiving this video in. So click on it, check it out. If it's for you, then great, sign up. If not, that's okay. I'm still here to help in any way that I can. So I hope you guys have a fantastic day.